Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Another fun-filled Monday after a 3-day holiday. So here we go. It's been fun. Last 3 days have been fascinating as usual. The same old story, different day. That's pretty much what it comes down to. The Fed wants the world to go up in value and has no relationship to price discovery or earnings or anything else. That's what they're doing, and that's what they're going to keep on doing until someone stops them. And I don't know out there. I don't see anything out there at the moment that tells us that anybody's going to stop them whatsoever. Matter of fact, the media finds it to be really positive because they see it as a doorway into socialism. So it even makes it even more crazy is the fact that it's like World War II wasn't fought. None of it was. It's all a joke. It's all a fantasy. All right, let's see what we got here this morning. Let's jump over to the dollar versus the Swiss. Right there, you can see firming up, moving up. We were in a couple days of a sell, and now they're turning back up. And obviously, we've been in 2 full weeks now of a weekly buy, so the dollar is going higher. I mean, you might as well own the coin of the kingdom. I guess that's what it comes down to now. That's the insanity of it all. Alan, how you doing? I need you, Doc. Where did you go? I was here, but maybe I should have turned on my Chicago Quant TV, and I could have done. In hindsight, I realized if I had realized what was going on, where Dukascopy was closed for the week. Matter of fact, I got 2 days into it, and I heard like, guy, can't you take off for a couple days? I was like, oh, sure, I can take off a couple days. We're just trading, doing the same stuff as we normally do every day. But I should have turned on Chicago Quant TV, and I guess that's what we'll do next time. If there's a loss of Dukascopy, I'll turn on my Chicago Quant TV, and you'll be able to tune in and see that. Let's see what else we got. So I'm so sorry, Alan. So sorry. We will be more prepared for being cut off next time. Let's see, what else we got going? I had the same frustrations, the same crazy, I've had it with the Bloomberg and the CNBC. I've had it, I've had it tired of the fake media in the States saying things that make no sense. Every day I hear that stuff and it drives me crazy, and that's why I am here, the voice of truth. That's right. I am the voice of truth. Alrighty, where are we at now? Let's see Turkish lira. Look at that, it's just dancing along those dotted lines. It's kind of surprising. You can see we're in a second day of daily buy right here. And I know it's on the fact check spreadsheet. If you go over to that line, which one is it? Line 17, yeah. So we're 1 day in a buy. Today is the second day. And we are 2 weeks in a buy. So we see that strength kicking in there. Now what caught my eye, welcome back, like Mr. Carter. Can we look at the euro yen? All day long we can look at the euro yen. There is the euro yen. Right, where are you, euro yen? I know it's around here somewhere. Nothing up my sleeve. There it is. And as you can see here, it's been firm for the last bunch of days. A little weakness actually after Friday. I guess there's Friday. And so it was almost unchanged. And you can see it's trying to dip. You can see that little dip that's going on there. We are going on the second week. We are in the second week of that, heading for a third week of a weekly sell too. So the pressure has been on that. Let's put that in there. Like so. The voice of truth. And there it is right there. That's exactly what it is. You can see that closed Friday. It tried to lift up. Isn't that interesting how you had these, the downward pressure for a couple of days, if you want to call it that. It fell from a close of 132.32 basically. And the next day it was 132.30, just 2 pips. And then the next day was 132.24. So it was like up a pip or two. Oh no, 24. I'm sorry. That's down another 6 pips. So just the 7 down pips started to put some pressure in the inverse relationship to the weekly, which is always fascinating when it does that. But look at it today. You can see the white line has pierced the minus time manifold. So it's kind of like the tachyon nature of it all. Squaring something that turns into a minus. All right, let's jump over to the euro. I hope that satisfied you, Alan. And if you have anything else, or if you'd like to look at it again, we can go back to it. We can take it apart and see if we can figure out anything else. Here is kind of curious. It was prepped for a daily sell, showed us the volatility on Friday. I thought that was fascinating because I was watching the cable getting smacked, and I was thinking, they're putting pressure on the euro too, and like I said, at this point in time, the Federal Reserve is holding the world up. It's I guess it's like Atlas shrugged. Atlas has the world on its shoulders. In this case, the Federal Reserve has the world on its shoulders. So it is kind of curious out of the whole thing at this point. It's almost like a cartoon. Reality is becoming very strange. There is the cable. Cable's got that little leak going on. It's broken out of its range like all the rest of them. You can see we're on a third week now, starting a third week in a weekly sell. So the pressure is on. It always perplexes me when I see selling, because I always think that in this particular product, I always think it's undervalued. But we are kind of marrying the 140-ish range now, so that's good. And the next honeymoon will be even better, probably on the upside. And you can see, the daily has joined the weekly, so it's been that winner chicken dinner. Heading over to, where do we go from here? We do the Turkish lira. So let's take a look at the euro against the Turkish lira. Right there. And you can see that's firmed up also. So it's 1 day in a buy, working on a second, but it's showing some weakness again. But still in a buy. And the same thing with the weekly. It went into the weekly buy here. We went down a couple days, went back up, made new highs. No, we didn't make new highs. There's a new high right there, really. That's the all-time high right there. And you can see the white line is piercing the plus time manifold now, trying to break down below it. It is below it, obviously, today. And we'll see what kind of pressure that brings, or if it stalls out and they start to go sideways a little bit. And you see like this weekly sell that it put in there 4 weeks ago back now, where it, the rocketing up, going in right into the first Monday. They just turned it back up again and showed strength when it came to the Turkish lira there, against the euro. Let's see. Oh, from here we slip over to Canada, and Canada's caught my eye this morning when we were sending it out from Chicago Quan. I was thinking to myself, wow, that's 3 weeks in a buy. We really thought this thing had some real downside move, but obviously the coin of the realm, better known as King Dollar, is forcing a whole different play in this game here. And you can see the daily sell. And the combination of Mrs. Yellen and Mr. Powell, Mrs. Yellen, former Fed chair, and at the same time now Secretary of the Treasury, and you got Mr. Powell, who seems to be dancing to whatever tune they ask him to dance to. It's been that way for the last 3 chairs since Bernanke. Bernanke thought he was saving the world. I guess there's another chapter or two about this. It's going to be interesting. Mr. Bernanke started this. He had his thesis in many ways was about the Great Depression, and so he had been given the opportunity to have an effect on when the whole banking system collapsed on Earth. And how many times do you hear that on CNBC or Bloomberg or New York Times or Washington Post, that the whole world's banking system collapsed, and now Lloyd's of London is gone. It's only in name only, and Deutsche Bank is in name only, and Citibank is in name only, and Merrill Lynch is all gone and owned into a forced marriage for a few dollars a share. And same thing with Santander and Wachovia, and I could go on, and Bear Stearns, and it goes on and on, but you won't hear that in the adult village of modern media. Everything's okay. And so we look here at the dollar and the Canadian, and you just scratch your head a little bit thinking, they were going somewhere, and now King Dollar has taken over again. And that's what it really comes down to, is King Dollar is going to stay King Dollar until, as we say around here in the farm country, until the cows come home. And that means when everybody shows back up and starts paying attention. And that doesn't seem like it's going to happen. So, it looks like King Dollar, just when we thought we could, see some strength in some diverse pairs trades, King Dollar had to raise its head up, Mrs. Yellen and Mr. Powell, and they said, no. King Dollar will stay King Dollar. And so that's where we are at the moment. And then you can see here in the Canadian, a couple of weeks in a weekly buy, and it has moved from the 120s heading for the 125s. So, Doc's math catches that stuff. And then you can see the little correction we started here, and it's just been sideways. The buyers are out there. They're not afraid to come in, because what do they know? They know that King Dollar is what Mrs. Yellen and Mr. Powell wants, and if that's what they want, that's what they get. All right. From there, normally we look at the energy sector and the metal sector. And so why don't we do this? We'll take a look at energies and go to crude oil and take a look at that. And that normally, when you see that rising, it's more of an indicative of a weaker crude, but not now, not at all. You can see crude oil is now flirting in the low 70s, whereas before it was playing with the mid 60s. And it doesn't seem like there's any slowing it down. And you can see here just the way the green line refuses to even remotely get through the positive time manifold on the weekly. You can see that they threw it into a daily sell one day, and it closed at 73.30, and the next thing you know, we have a high today of 74.45, so another dollar and change higher. They just, that is a great surrogate. If you want to be long dollars, good thing to do is own oil. Now, when it comes to the metals complex, which is pretty perplexing when you realize how many major institutions are bankrupt and gone, but they're still held together by central banks. And so, if you'd have said to me, and I say this many times in the webinar here, if you'd have said to me in 2007, 6 months to 9 months, I guess a year before the collapse of the financial system on Earth, and then when you take a look at, you say, Doc, what do you think? Where's gold going to be if Deutsche Bank and Lloyd's of London and Merrill Lynch go out of business, and Bear Stearns goes out of business, and Citibank goes out of business? Where do you think gold will be? And I'd be like, oh my God, gold should be like between $5,000 and $10,000 an ounce. And here you get Mr. Bernanke taking gold and turning it into a true currency. And it's part of the arm of the King Dollar now. And so, it makes it act very strange. And so we see oil, which normally when oil is rallying, right? And here we see gold trading in the $1,900 area, no more than, say, 30 days ago, okay? And then you go and look at crude oil again, and you can see 30 days ago there, crude oil was flirting with the mid to low 60s. See, like 65, 6, mid-range, right? Now it's $10 higher. Totally the opposite of classical, fundamental concepts of inflation and costs and so forth. Now it's a distortion, a true distortion of a lack of reality when it comes to fundamentals. Hence, no more fundamentals. And so you can pretend that there's fundamentals, but really there's no fundamentals anymore. Central banks just buy the stocks and just lift them up even higher. That's all it comes down to. Or they lend money to institutions and tell them, we give you the money for free, and what do you think you're supposed to do with it? And they go, oh, we're supposed to buy stocks with it, correct, for free. So I can buy stock for free. And then they can do the reversal conversion. I know it's a little sophistication and deep in the weeds. That creates a synthetic bond. So now they're putting on a synthetic bond for free and just collecting a little dividend to make a little money. And it's all for free. And that's how, because I mean, some people are probably saying, what's he talking about? Giving $1 billion to, Citadel or, Dahlia, at Bridge, it's like, why are they giving hedge funds billions of dollars for free? So that they will buy stocks, and then they go and do the reversal conversions in the options derivatives universe, and that makes them have a synthetic bond on, and so now they're making money off of money that's given to them for free. And it's not that complicated. Matter of fact, and I know this sounds a little like I'm saying it's a Ponzi scheme, but that's what Madoff was doing. The investor slash embezzler slash former chairman of the NASDAQ, the largest exchange in the world now. What he was doing the same thing. He was doing reversals and conversions, making great money. Everybody was happy, and when interest rates dropped below 12% back in that day, he couldn't give them 12% return anymore. He only could give them 10. So that's when he started his shenanigans and doing illegal stuff. But before that, he was a legit guy. And so what we're watching, you just have to feel, you just know deep down inside that this has to go the same way. Somewhere along the line, we are now in the illegitimate range of central banking. And that's because they're trying to follow through on Mr. Bernanke's idea of how to run an economy when it collapses. And you don't do anything but save in this case here, they saved the billionaires. That's what they did. They saved the millionaires and the billionaires. And at the same time, they made the regular average person okay. Made it so that they didn't lose their houses and their, bank accounts and so forth. And that's what happened during the Great Depression, is that the little people and big people got damaged from it. So anyway, that's the end of my irate attitude about it all. So again, the Canadian, as we looked at, and you can see here, these products are moving totally different than what normally is the characteristic of those pairs trades. Now let's drop over to the South African Rand and just see what's going on there. Let's close that. And the South African Rand, we like to look at that looking at the metals market. And so obviously the Rand must be rising because we see gold going down. And of course, that's what it's been doing. It's been following it. That currency follows the metals market. Now in this case here, you can see it's gone sideways the same way gold has gone sideways, right there. See, gold's doing the same thing, just sideways action, really. It's not really going up or down much, $15, $20 here, $5, $3, $4, $7 there, but in the end result is that it closed at 1782.9 on the 21st, and today we are trading at 1777.8. So we're only looking at a $5 difference over those 6 days. 1, 2, 3, 4, 5, 6 days. As much as it vacillates up and down and almost hit the $18 area, so it went to 1795.6. And same thing with the lows. Notice there seems to be a floor in this thing. They smacked it for a couple of days, and that has become the floor. And so, central banks are being quiet again. They're not pumping and dumping. Hey, 47, how you doing? Can we look at GBP JPY? Sure. GBP JPY. Ooh, there we go. And there it is right there. GBP JPY. And you can see a little weakness in here. We got into a daily buy off that big spike and went up for a day or two. 2 days it went up afterwards, and then settled into the soft side, and then it went into a sell on Friday, and it seems to be sitting there at the moment. We are in a weekly sell here since there, so obviously weekly and daily sell from this point caught that slide really, really well. That was not only winner chicken dinner, but it was not only was it one chicken dinner, but it was a whole box of wings, and wings are so much more expensive right now. And so you got a chicken dinner and wings, and they probably gave you a 6-pack. And it was a definite happy time. I see. Alan says Russian Federal Bank concerned over raising food prices, looking at more hikes on rates. Well, I guess if you raise rates, doesn't that make it harder to grow food? I would think so. I'm not sure what they're up to, but if you read it from the U.S. media, the chances are that it's wrong. If you read it from Russia, then it's probably right. I saw a quote by Mr. Putin. I think I'm going to show you a quote by Mr. Putin since you mentioned that. I thought the quote was very fascinating, and it really caught my eye, and I posted it today. And I don't know when he said it, but I do remember him saying. I think he said it about 9 months ago, really, or 7 months ago, or something to that range. But here's a interesting quote from Mr. Putin, and it makes a lot of sense. I mean, it really does. And I'm going to put it up on the screen here. Let's see, where is it at? There it is. Let's see if I can do it. Let's see, that way, and I'm going to go like this. And let's see if we can do this. Let's just do a Control V. There it is. And let's see if we can bring this up on the screen here. How do we do this? Do we get rid of that? And then we bring this up. I guess there it is. And there it is right there. Look at that quote from Mr. Putin. I think it's fascinating. On the U.S. media, either they don't understand the damage they're doing to their own country, in which case they are simply stupid, or they understand everything, in which case they are dangerous and corrupt. I thought that was very interesting by Mr. Putin. So, when you don't have a media broadcasting about the average things that are going on, then that was it. You know what I mean? That is the end game. There is that they, without knowing and having information, then what happens is that you end up kind of repeating history. Doing foolish things, making same mistakes. You don't have anything to refer back to. So, I think that is interesting. And when you look at, the metals market and you see the dollars market, and there's no doubt that the currencies are probably the best thing to trade nowadays, the closest to true value. But even then, we are in the middle of a lot of fantasy and fake. So it makes it very, very hard. And it's a real challenge to the marketplace when you're using fundamentals, because, well, fundamentals don't really, the only real fundamental out there is the Federal Reserve, don't fight the Fed. That's pretty much the only fundamental you can trust. Don't fight the Fed. If the Fed likes the markets and wants it to be up, it's going to be up. And if the Fed doesn't like the whatever market it is, and wants it to be down, it will be down. And that's why you see silver trading in the 26s and the 27s, and gold trading in the 17s, not the 3,000s and 4,000s. They want them down, and that's what they're going to do. They're going to keep it down. So that's the craziness of it all. 47 says, looks to me on Dukascopy that it is going back up again. Oh, what's that? The GBP JPY? Let's go back to GBP JPY. Yeah, I think I interpreted it the same way with you. I'm waiting for the weekly to kick in again. Once we get this weekly buy signal, like it did here, then I would imagine that the strength will be up. In this case here, we went into the weekly sell right here, and the pressure has been down, and then every pop seems like it wants to push down again. We'll see. You know, we're in a daily sell, we're in a weekly sell. Chances are they're going to find a way to roll over. About the odds are about 8.5 out of 10. So almost 9 out of 10 is going to be, the chances are, you know, down, not up, which is, you know, the whole gig there. The lack of volatility means a quiet summer, and a quiet summer means a bear is coming for the currency market. Yeah, well, I guess that's why we're seeing the king dollar, you know, lift itself the way it has. King dollar has been holding up very strong. You know, Mr. and Mrs. Mr. Powell and Mrs. Yellen want king dollar to stay firm, and so that's going to stay firm. I mean, that's the deepest fundamental you need to know. Forget about inflation. Forget about CPI. Forget about PPI. Forget about employment or lack of employment. Forget about interest rates now. Look at interest rates. I mean, people are shaking their head. They're saying, like, aren't we in the middle of an inflationary spike? Why are interest rates going down? Well, the Fed wants them to be down. If the Fed wants them to be down, they're going to be down. That's it. You know, it's not much more complicated than that. Right. So where do we go from here? Let's jump over to the ruble. See what the ruble's up to. And there it is there. You can see to a great extent. It's been in that sell since late April in the 75 area. And now we are flirting constantly with the 72 area. You know, slips into a buy for a little while like it did there. And then now back into the sell and goes sideways. And they'll probably find a way to, you know, get it. I guess they're going to go challenge the 70 at this point. You know, you see they broke these lows, and they broke the lows of 2021, and now the question is, will they break the lows of 2020? Now the lows in 2020 is in the 68 area over here. That's why, whereas last summer we saw the ruble fall down into the 68s. And you can see it's very anemic. I would say very leaky, but not drowning. You know, so I don't really think we're going to see a lot of a lot of smash going on when it comes to the or in this case it's really buying going on. They're buying rubles. They're stepping up. You know, there's less rubles to the dollar. So you know, if we see another 3 full handles down, I'd be about surprised. I would think that the ruble will probably end in that area there. Doc, how about Mex Peso? Did a surprise rate hike? No, let's check that out. We've been watching the Mexican peso. It's been trading really well. Right there. And, oh, I see that hump. Yeah. Let's widen that out so you can get a better picture of it. You know, we were in a weekly sell here. And it went. We were in a daily sell there. You can see it went down. And then we went into a daily buy here, and look at that. You know, the weekly, I guess it was started like way over in here. So you could definitely be long, but you had to be very fleeting because we weren't confirmed in the weekly buy. We were just above it right here. And so you see it rallied big time. You know, that was another one of those winner chicken dinners where you got 2 chickens, 2 bags of wings, and a case of beer. That was the winner there. And then you can see here they threw it into the sell again, and you can see the time manifold got pierced. And then we'll see, what did they do there? Did they close that in a weekly sell last week? Yeah, they did. So now we're in a weekly sell again. So whatever, maybe that was Camilla going to the border. I don't know. Anything's possible. I mean, she went to the border, so they were probably afraid she was going to do something. And so last week they closed at a weekly sell. Let's make that solid line like that. And you can see that it's kind of sideways at the moment. I kind of think the Mexican peso wants to go up in value, which means that it's going to go down against the dollar more. And so whatever shook it up here, it seems to have gotten rid of that problem altogether. Let's see. Let's see, where are we at? So, 47, lockdown in London, new COVID Those variants mean nothing. Honestly, I'm a man of science. So stop. Don't pay attention to it. It's just the political hacks trying to turn the world into some type of socialist dream. That's all it is. These masks and all that. They're not looking at herd immunity that's developed. They're not looking at natural immunity that is there. You got to remember, if you're going to take their numbers serious, you have to believe that COVID is a cure for cancer, and COVID is also a cure for heart disease, because the numbers of people dying from heart disease and cancer in the United States last year dropped by 90%. 90, not 9. 90%. So, COVID is obviously then tells you one thing. As a scientist, one thing for sure is it has a curing ability for some very deadly things like heart disease and cancer. So shouldn't they be celebrating, and shouldn't everybody drop their mask? Because you don't want cancer, do you? And you don't want heart disease, right? So, so don't pay attention to that crazy lockdown stuff. It's just the socialists trying to find ways of taking your life and your freedom away from you. All right. I think we've done did I answer all the questions? I think I have. Good. Any more questions out there, fire them out. Doc's ready for it. He's got 3 days of vacation into him. Doc's ready to rock. The voice of truth. All right. From there, let's see. We looked at peso. We looked at the South African rand. We looked at the ruble. I think we're done when it comes to the currencies, unless someone wants to see a particular pairs trade. We'll drift over to the commodities, and we can always run back to the currencies if you see something you want. Let's see. So here's the NASDAQ 100. You can see it's up very firm this morning, and you can see it's in a weekly buy now for this is 3 full weeks going on a 4th. So it's run from 1400 to 14,400 basically. So a 400-point move over the last 3 weeks. Looking at the S&P 500. You can see we went into a weekly buy last week after going into that weekly sell up around the 4,250, and it fell down to 14,000, a little under 150, and now we have made it all the way back. We went into the daily buy here, another winner chicken dinner thing, and we were in a weekly buy all week long, confirmed it at the close last week, and we'll see if it stalls out and rolls over again or if it keeps on climbing. And we know that the central banks want it to be up, so more than likely it'll keep on climbing. Then you see here, the Dow Jones Industrial Average went into the sell in the 34,300-ish, or is that 500-ish area? 500 area, and then it fell all the way down to the 33,000 area, so it dropped 1,500 points. And we went into a daily buy at the 33,850 area. And now we are challenging the 400 area. So, you can see that. But notice this week, it's even worse. And I kept on thinking, I said to myself, chances are that, maybe the weekly Dow on Monday will start to show some life in it on the upside. But no, it's not doing that. It's actually down on the day. So, it closed on Friday at 34,331. And right now it's trading at 34,267. So it's down 60 some odd points from Friday. You can see the daily won't give up. The short-term money is still pouring in. And we'll see how that goes. If that goes into a daily sell, this could be the real sell-off that begins. And that could be the real gig right there. Hey, Doc, we look at a euro-yen? Sure. Let's look at the euro-yen. That was my pet pig, Swirly. She used to make that sound. All right, euro yen. There it is right there. Looks like what was it? Like that wasn't the peso. What was it? What was that other product that 47 was looking at? GPP JPY. That's what it is. It looks like that. You know, it has that same look to it. Let me just go show you. GBP JPY, and we'll come back to this. There it is, right there. They look the same. Same type of movement. Same action there. Now let's. That's in a weekly sell for a few weeks. Now let's go back to that euro yen. Euro yen. Right there. As you can see, same things going on there. Went into a weekly sell a couple weeks back, and it was a nice smasheroo. Went into the sell here compared to there, and it still made good money. And then it, you know, threw back into the buy here, and it's doing some type of dance. But look at this; it's feeling that pressure also. So this could be short-lived, just like the Dow Jones Industrial Average. This could be the beginning of you know, we get into a daily sell matching up with that weekly, and we could start to see some real pressure into these type of these two markets, you know, and then probably some more even. How's that? Let's see, what else do we got going on here? But I think that's truly the way to look at this, is that that action is trying to tell us that they tried popping it, and the pop is not holding on, and that's kind of fascinating to see. You know, that can be the hump. Maybe July becomes August. You know, normally markets top out in August, but you know, I don't. You know, I'm the political economic structure right now is so, I want to say, just so upside down. It doesn't. It's the story is noisy, and the story at the same time, you have Mr. Powell and Mrs. Yellen holding the marketplace up and giving money to almost anybody who will do synthetic bonds with it. So, you know, I mean, the moment you suck up that income, not the income, but you create the income for them for free, and at the same time you're sucking up outstanding inventory. In other words, you know, they buy stocks, they go and sell calls against it, and they take that premium and they buy puts against it, and it's like a dividend. It is a dividend play. That's what that is. And then vice versa. You say to yourself, why would anybody do the opposite side of that? Well, that's because you get short interest from it. And so when it doesn't cost you anything for that money, then you're beating the mathematical mean automatically. So there's a profit in there, as long as you do the smart things, you know, do the synthetics, and, you know, trade it correctly. So let's see, where are we at now? So we just did euro yen, and where do we jump from here? I guess we go back to the commodities again until someone says, stop, Doc, I don't want to see that. And then we'll go look at whatever you want to see, whatever you would like to see. Now here is the Russell 2000, some of the weakest of the week of stocks, trading at all-time highs. So what's that tell you? People are doing synthetics in there. You know, people are being handed that money, and why not? You're giving money for free, and all you have to do is hand it back to them. Now, you know, you can do a couple things. You can go out and buy bonds, right? That's what the Fed wants you to do. You can go out and buy stocks. That's what the Fed wants you to do. So, I mean, you know, and in anything in between those things. And I imagine one thing, I bet they're pretty nasty if you go and try to do it in gold. They'll be like, why are you buying gold? Oh, I'm doing the synthetic in it. Why are you buying gold? You gave me this money for free. Yeah, about that free money, I think we're going to exercise that tonight. You're going to get we'll take it. Oh, wait a minute, I was going to do a stock position. Oh, you're going to do a stock position. Oh, in that case, sure, keep the money. And they can see exactly what you're doing. The Federal Reserve has the power to see anything and everything you do as a fund. So they know when you're naughty and when you're nice. It's like Santa Claus at this point. Yeah, they know when you're naughty or nice. All right, and so there is the Russell 2000 trading towards all-time highs, and I'm sure their income does not represent that, but who cares? What does earnings mean? Then let's take a look at the bonds. They pushed it into a sell on Friday, still in a weekly buy, and sure enough, it's trying to lift its head back up. Hasn't gotten there yet. We'll see what happens. But they'll just lend more money out overnight. And that's what they do. They actually do that. They lend more money to funds that like to trade interest rate products. And so if you like to trade interest rate products, then you got to say, oh, okay, well then, maybe we'll lend more money to interest rate players. Doc, can we look? I see, Doc. What are your thoughts on the financial year end? Hey, as long as Mrs. Yellen and Mr. Powell want the markets to be up, they're going to find ways to make them go up. So any sell-off, look, the Dow went down 1,500 points, and where are we now? Pretty much unchanged. Came right back to it. So they want them down. They're just going to go lend even more money to funds. I mean, who knows? They're lending that money to banks. They're lending that money to mutual funds. They're lending that money to hedge funds. Can you imagine Citadel gets like, a couple $1 billion to just have for free? Wouldn't it be nice if someone knocked on your door and said, hey, can I lend you, $500,000? And all you have to do is pay it back and you don't get any interest charges whatsoever. I bet you would start scrambling and trying to figure a way of investing it so that you could hand it back to them and slice off that little profit from it. You'd run right down to your local bank, buy some CDs for 90 days, and next thing you know, you're getting interest on $500,000 for free. So I would have my doubts that Mrs. Yellen and Mr. Powell are going to change their attitude about anything. To me, I imagine that they'll just stay the course. And so what will happen is you'll see stock market try to stay steady. That's the way I see it. Does that answer your question there? Yeah, good, and good. Let's see, what else have we got going on here? Okay, and then where are we at from there? I guess what we do is we go over to, again, the commodities and see what else is going on in that area. We could take a look at some of the grains. Oh, copper, there's copper. You can see copper, they need all that copper to make, those electric cars. So you would assume we're seeing, some buying, but notice, I guess California, I thought California really tipped it off. California has, they're trying to make it so that only electric cars, right? And then, what do? They tell their population, please stop charging your automobiles. Yeah. So they make a law that says that we need to have all electric automobiles between now and some X period of time in the 30s, I think it is. And like 2033 or 31 or something like that. And then, out of nowhere, they get nervous about electricity because they don't have enough of it. And then they tell people, you're not charging at the right time. If you can't charge at the right time, don't charge at all. Don't charge that car. Don't charge it. No wonder everybody's like totally lost and confused. You've got governments, it's like state-sponsored terrorism. That's what it is. We have government now sponsoring forms of terrorism, like you will buy an electric car. That's what copper's all about. You need the armatures to be able to have the electric car. At the same time, now they're telling you only can charge it certain times a day. And if you don't charge it those days, we're going to find a way of punishing you. Sick. It's all sick. And you can see here we've seen copper fall from the 480 area down to the 418 area. I mean, it's not like they stopped trying to sell electric cars or something. You can see we've been in a weekly sell too for a couple of weeks. Going on a fifth week now in a sell. So, what else do we got? Natural gas is like the opposite side of the coin, we're in a weekly buy in that product for, what's it say on a fact check spreadsheet? 11 weeks. That's line 10. Right? So it's been in a weekly buy for 11 weeks since back here in the 280 area. And right now the product is trading at 357, as you can see right there. So, the natural gas is being bought because they need to generate electricity and do all these other wonderful things. And so it's a real I want to call it something, but I'm not gonna. It's a family show here, so I'm not going to call it that. But it's definitely a mind melt. That's for sure. It's not the word I was looking for, but it's definitely a mind melt. Yeah, mind melt. Melt that mind. Exactly. Melt that mind. Can you spell melt your mind? All right. Let's jump over to. Let me just check the chat line again to see if there's any other questions or anything someone would like to see. Please take a look at sewer beans. Yeah, let's check it out. Let's see what the sewer beans look. It's kind of interesting. I think July. Corn went into if you notice on the fact check spreadsheet, line 2, corn is back into a weekly sell. Beans and wheat are still in weekly sells for 6 full weeks. So let's do that. Let's check that out. What it is what it is. Now let's load up Robin 2. There it is. And so, hey Robin. And soybean oil, yeah, we'll do that too. We'll do soybean oil too. There's the July beans, as you can see right here. And you can see we're in a weekly sell since back here in the 15 area and 16 area. The daily sell went into a sell on what was that? June 3rd in the 1585 area, and now it's been in a daily sell ever since. Can't get into it. It tried to get into a daily buy, but we had a volatility signal instead, and we're in a weekly sell, so you wouldn't buy it anyway. So it's been basically in a sell from almost the $16 area all the way down to the 13.5 area. So $2.50 down. So now that's July. Whoop, what is that? That's July beans. Now let's check out. What's the next thing we check out? Oh, let's see who's talking. Strings 2021 is on, and Doc is definitely grooving with the strings. This anti-accelerator guy, me, is still tuning into strings. Still do the strings. We got to see where everybody's head's at. That's what it really comes down to. And so let's see. Let me just put my strings up so I can start watching the broadcast today. Let's see, where's it at? It's around here somewhere. View. No, that's not it. Oh, let me get bean oil up there. And I'll load strings in while I'm doing that. There's bean oil in July. And you see it's flirting with the daily sell. Been a daily buy for a couple of days. But we're in that weekly sell for a few weeks now. So since what's that, the 68, no, about the 67 area. So, and we've been in a daily sell from up in here. What's that, the 70 area. And it fell all the way down to the 56 area? Yeah, 56. So that's been kind of interesting. Let's see. Let me just get to my strings. I need to load that in case I'm. Let's see. I think I'm going to try to present next year. Let's see. There it is, right there. And today is the 28th. Why? Okay. No, I don't want to send it. Discard. There we are. There it is. Let's double click on the 28th. And there we go. We got strings up there at the same time. The Theory of Everything. Okay. By Laughlin. and pines. Oh, that sounds like a fun thing to look at. The theory of everything. Wow. Guys want to see what I'm looking at? The theory of everything. That's entertaining in its own right. Let's see, where is it at? Inbox. Slide down. Right there. Not there. Guess we're missing that one, aren't we? There it is right there. No, that's not it. Oh, there it is. There you go. Yeah, so here is the theory of everything. There we go. We'll bring that up for you. The lowest Landau level limit. The theory of everything. Little string theory here. Why not? This is where all the scientists... Do you ever see that picture of Madame Curie and Albert Einstein and Max Planck and Mr. Schrodinger, and they're all in suits and they're being taken a picture of in 1927? That's what this is. Every year they do that. And now we have Witten and Juan and a few other people and Susskind and so forth. All right, so there's the bean oil. Let's see, let me go back to the chat line. I've strung you out. Deck. You want to see deck? Sure, we can do that. Deck beans. That's a $12,500 win. Is that what that is, Robin? Wow. All right, let's check out deck beans. Bean oil? Is it deck bean oil or deck beans? Must be November beans. So it's deck oil. Okay, so here's deck oil. You can see they went in. That's the funny thing is the back months, all of them are in buys now again. So it went into the daily buy here. You can see last week it closed in a weekly buy. Same thing has happened in the January beans. See that there? Jan beans did the same thing. So it's only the front month that's falling down. The March beans, same situation. All of them are doing the same exact thing in the back months. They're lifting them up. They're buying them. You know, they're anticipating that the, I guess the July beans is like an old crop. So, and then, like I said, there's the July beans. You can see, you know, it went into the daily buy like the back months did, but the weekly is still holding down. So I guess we'll have to see how that is. Okay. So yeah, that's the, and you got to imagine to the currency traders, these commodities, they're traded in, you know, U.S. trades 25% of the world's beans, or grows 25% of the world's beans. And Brazil is the other big player. They also grow 25% of the world's beans. Then after that, it's distributed to the rest of the planet. And so you got to imagine anybody who's trying to be in a dollar-denominated product, you know, can basically use the July beans, or you can use soybeans in general, as a derivative of a currency pairs trade. Because you know that if you short the beans, that means you're short the dollars. And then at the same time, if you pick up calls or binaries, you start to hedge your short, and you're playing the upside. So that's how that works there. And this is food, you know. So listen, Robin says it's in just about all our food. Yeah, exactly. So I mean, you know, this is a product that's being used by everybody. So yeah, that makes total sense. Why, thank you very much. Thank you very, very much. Well, Doc's done. I'm going to sing a little bit, and then I'm going to go back to string theory. So, happy trails to you until we meet again, which will be Tuesday. Happy trails to you, to all our trading friends. Ta-ta for now, traders. Catch you tomorrow at Dukascopy here.